Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is a weekly technical analysis of LME 3-month nickel and zinc. I'll start with LME 3-month nickel. The lows from 2019 and 2021, specifically the August 2019 high at, the highs and lows, 18,850, the June 2021 high at 18,610, and a nondescript high from May 2021 at 18,265. All these halted a decline from earlier this year in July and turned the market back up. Yet this move higher only lasted until the start of August, when the market hit up against the overhead combination of the flatlining long moving average, currently at 25,300, and the then short medium moving average, currently at 22,505, and also the August 2011 high at 25,195. You can see what happened when it tried up through all those levels. Prices managed to get to the August 2011 high, but failed to close above any of those resistances at that time back in August. And prices headed back down again. However, this time, prices reached down only as far as the May 2014 high at 21,610 and the February 2014 high at 22,155 before gathering some resources during August, trying higher in the meantime, but easily battered down just by the short medium moving average. In late August, the market was pressured down enough by the declining short medium moving average they briefly tried lower. However, this attempt was quickly snuffed out, leaving a small island top. Then in September, early September, the market punched out up and out and through the short medium moving average. We saw a further exploitation of that break higher, but only as far as those same key resistances as before. The long moving average, the August 2011 high, those two. However, this time there was a new factor. The declining medium moving average, currently 23,325. This looked like it might be a repeat of the action back in early August when prices clashed with the declining short medium moving average. Yet the action 3 weeks ago looked like a significant move higher, closing over the medium moving average for the first time since early June. However, yet once again, the move higher was stifled by the flatlining long moving average and the August 2011 high at 25,195. Such that from the high water mark of Wednesday 3 weeks ago, prices dropped back down below all the moving averages and were finally halted by the February and May 2014 highs, as well as a new uptrend formed since mid-July, currently 21,485. Make a note of that one, that's important. So where has that left us now? Well, we've had one pattern already formed over September, an island top, though not right now an influential one. Meanwhile, something I've mentioned before is becoming more and more significant, and I quote, "The action since mid-July is a reminiscent of a possible ascending triangle, though as I said earlier, it is still early yet. This also goes for any idea of a bull channel." End of quote. This idea of an ascending triangle, currently 21,485 to 25,185, is seemingly the key to the current situation. Even now, it is still too early to start looking at targets, as the one attempted break higher in September was soon found out to be false. But the pattern build-up continues to look good, and I would suggest keeping a very, very close eye on that triangle going forward. LME 3-month zinc. I'd often spoken about how I had on occasion taken a step back and looked at the monthly charts here to get a better picture. From these occasional actions, I've noted two patterns in operation. The principal pattern is the 2015 to 2020 bullish Andrews pitchfork. The most recent events involving this pitchfork have been the approach and rejection from testing the lower time, currently at 27.64, made 2 weeks ago. The move back up from this rejection of even testing it was halted last week. As above, we have a hell of a lot of resistances, and in no particular order they are: the slowly falling long moving average, currently at 35.72, the declining medium moving average, currently 33.15, the 50% Fibonacci line of the April to July move at 36.82, and finally the second large strategic pattern that I saw on the monthly charts. The lower trend line of the large 2020 to June 2022 ascending expanding wedge pattern. That's currently at 37.71. This second pattern was broken down in June, saw a retest up to the trend line in August, and a subsequent drop that includes all the subsequent ascending, expanding moves lower. Let's now look and see what this second pattern, this ascending, expanding wedge pattern, has left us with. Well, the primary target has been achieved, but the secondary, much harder to reach target X1 at 2082, which is way, way below the bottom of my daily chart, it is still alive as a target and out there, though obviously way lower. Now, looking at the potential for targets, for this target X1, I'll call it, being achieved, I would say it would be fair to treat this at the very least as a longer term target prospect. Yet there are a few more immediate patterns that I'd like to discuss prior to such a move lower. The first is the May to August bearish Andrews pitchfork. The market is now moving down beautifully, currently in between the upper time, currently at 32.07, and the middle time, currently 25.35. Then there are two possible recent patterns to look at. It is a choice as to whether the late May to day action is a possible bearish halfway hesitation or a possible double bottom. It all very much depends on what the market will do at the June 2021 low at 28.10. We're already set up for a double bottom, and the market last week looked like it might follow through higher with such a pattern. However, this week has been different, and the question is again open. I suspect that we will have an answer by early to mid-November, as that is when the upper time of the bearish Andrews pitchfork meets the June 2021 low at 28.10. Thank you for listening. This weekly broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.